Hi, this is Zach Me with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 3rd of August. Starting off with the FTSE 100, which disappointed us with the failure at that February resistance line, fell below the 7750 area, and then the target was to at least head back towards the 200-day moving average, 7600. And in fact, the worst case scenario was pointed out as being a return to that July breakout level through the June resistance line of 7450, which we've just done today. The problem with this market is that below 7400 there's not really any support until 7250, so we could see a rather quick decline as we saw at the beginning of last month for the start of August. But let's see if we have that end of day close back below the 7400 level. At the moment we might just get away with it. RSI back below 50, as one would expect now, so 40, so there is scope for that retest of the 7250 area, which has been going on since basically March. Moving on to the DAX, and here also a market in a little bit of trouble, double gaps to the downside. We're right on the floor of that rising trend channel from August. That is 15,700. Below that, obviously, the July floor just below 15,500, but then the risk of a test of the 200-day moving average at 15,200. RSI is also obviously pushed back below the neutral 50 level, so there is scope for that nightmare scenario of test of the 200-day line. We haven't been at the 200-day line since back in November, so that would be a rather negative development. This stage, early and end of day close well back above 16,000, and the 50-day moving average, the blue line there, really negating the possibility of a rolling over on the DAX. Moving on to the Dow, where luckily we hedged our bets in terms of the commentary. Here we're back at, probably not as bad as actually the other two markets we looked at, but we're back just below that March resistance line projection, 35,200. The risk, though, is that we'll have to test June and initial July resistance at 34,500. before this latest setback on the credit rating downgrade is over. You can see that bearish divergence there as well, so that is a sign, I think, that 34,500 could be on its way, while if we have a break back below the 35,000 level. On to Bitcoin, which never really enjoyed the strong July that we saw for the indices. Here we're still dithering either side of the 50-day moving average. The good news is that that's rising quite sharply, so that could be a positive later this week or next week. The 50-day line around 29,900. So we're looking for an end-of-day close through that to then give us a chance of retesting last month's best levels. On the downside, I suppose it's difficult not to look at the 200-day line there at 26,700 as a potential support. And if you look in the RSI window, we've had a failure at the RSI 50 level, so that does suggest some more negative momentum is gathering for 28,000 and then back down to the 200-day line, 26,000 or so. Moving along to the stocks, and probably one of the most difficult stocks to chart is Avact, and you can see why from the daily chart. To be fair, in the recent past, the shares did find resistance, probably where you would expect them to do, around the 200-day line, but that 200-day line now falling, and it'll be a bit of a struggle to break through the 50-day moving average, currently at 104. Above 104, looking for 121 again, which is the 200-day line, but we might just need another test of support in the low 90s before this market can then head back to the top of its recent range. RSI is through neutral 50, so that is a plus, and does suggest we've got a reasonable chance of breaking through the 50-day line and heading back to the 120s. On to a stock which I've been covering quite regularly of late, Canadian overseas. The reason for that is that by some quirk of fate, it has one of the best charting setups, i.e. we've had a bear trap gap reversal, unfill gap to the upside at the end of last month. Bullish divergence to back that, and that suggests that we could at least hit the top of the triangle there from back in June at 5.25 pence by the end of this month rather. Good support there coming in at 2.5 pence, which is done for 4 days in a row, which is quite impressive. So that does suggest that 3.25 and then up to 4.5 could be on its way over coming weeks. But I suppose the easy thing here is just to have the stop loss there on that just below 2.5 pence, just in case the bear trap gap reversal doesn't work. On to Chill Brands, which has had a bit of a rug pull over the recent past after spiking towards dizzy heights near 14 pence at the end of May. Now we're just trying to find out where the shares will find their floor. Bounced so far on the 200-day line there. That's hiding behind that uptrend line from back in February. That was around the 4.5 pence level. So above that, looking for at least a rally back towards resistance on the way down around 6.5 pence over the course of August. But the problem here is that the shares could just keep coming back and back a bit like we've seen on prospects. On to a stock which people seem to be looking to recovery for. It's Fusion Antibodies, and here I think the key will be getting an end of day close above the blue 50-day moving average. That's around 7.4 pence, and above that, which we could do today, looking for a resistance line projection there from back in May up to 13 pence. If you look back, you can see that we haven't been properly above the 50-day moving average really since the start of the year. And we were finding support there since then. We just found resistance. But it looks as though we could get a little run up towards the low teens if we get a swift end of day close above that 50-day line. If you're cautious, you wait for the RSI, currently at 44, to break above the neutral 50 level. Onto a rather happier picture, and it comes in the form of Great Southern Copper. Here we've had a great recovery over the course of July, then found new support at old resistance just below 2 pence, above that 1.9 pence area, looking for the shares to retest 2 3/4 last month's resistance by the end of this month, and hopefully a bit sooner. Best case scenario up to 3.5 pence at that October resistance line projection. I suppose one of the more followed stocks of the day will be Kodal. It's up 10% on funding news. Needs to break that line of resistance there from April. That's around 0.58, and above that then we'd be looking for a move to 0.7 pence by the end of this month. The unfilled gap to the upside above the rising 200-day line, inspiring some confidence today. On to Light Science, which covered a couple of weeks ago. I think it's pulled back from the dizzy heights, or it had done, but looks like we've got a V-shaped bull flag here above a rising 50-day moving average. That suggests that as little as an end of day close back above last month's resistance, around 1.6 pence, could be enough to take the shares up to 2.4 pence by the end of this month. The 50-day line, a nice stop loss there, around 1.15 pence. Moving on to Orca, which I haven't covered as much as I should have, perhaps. Here you can see that Orcadian has sort of 3 different trend lines in play at the moment. First one was the initial target there at 4.75. Above that, then there's another resistance line there around 7.25. An end of day close above 7.25 could take the shares up to 15 pence. Obviously, we already had that spike yesterday to 11.5, but 15 looks like the target here, by possibly as soon as the end of this month, while we remain above the 4 3/4 pence zone. On to Optibiotix, which has been a real phenomenon over the last few weeks. V-shaped bull flag here, found support at what was the previous target there, around 33 pence. Above 33, looking for the shares to hit the, as high as the early 50s, so up to 52 or 53 pence. And maybe that could happen as soon as the end of this month. The reason for the relative optimism is the way that the 50 and 200-day lines are both rising, but probably just a week away or less from a golden cross, and the run up to a golden cross tends to be the strongest part in the cycle. On to Shield Therapeutics, and here, interesting configuration. We had a golden cross earlier this week. Just need to break the 11 3/4 pence area on an end of day close basis to open up the chance of 14 pence by the end of this month. Ideally, the shares stay above 10 pence in the interim. Finishing off with Upland, which is also quite loyal to the trend lines that have been drawn. We had the initial target 0.95, then 1.5, and then best case scenario target up to 2.6, which could still be seen by the end of this month if we get a decent end of day close above 1.5 pence over the next few days. You can see the shares certainly thinking about it at the moment. Only back below 1.1, really delaying the prospect of 2.6 pence over the near term. That's it from me today. More updates tomorrow.